Up next, I'd like to call Chris Swan, who is our Chief Financial Officer, and she'll be our last report before lunchtime. The pressure's on.
Hi, Hati. Denize Sakuze Skyze. Si Chris Swan Satnai. Si Sune and Irene Swan Luzie Hasne Jahnian. Si Sube Victor Swan Hasne. Si Asachat Sydney Hasne. Leknak Las Hasne. I also want to acknowledge the Nodli Nation for having us here today. I greatly appreciate it. My name is Chris Swan. My mother was Irene Swan Luzier, formerly of Vanderhoof, and my father is Victor Swan, formerly of Smithers. I am mom to Sydney and 3 fluffy pet dogs. And my role here at Carrier-Sicani Family Services is Chief Financial Officer. I am very pleased to be able to present to you today the financial statements for the year of April 2024 to March 2025. I couldn't be here today without this team that's on the screen in front of you. They have worked very hard this past year to ensure all financial transactions were processed diligently and expediently. They have done this while demonstrating a commitment to maintain financial management, while as an organization we continue to grow. This year, this team processed 45,000 invoices. That equates to us processing 170 invoices each day. And I would like to take a moment to recognize that team. KPMG was engaged to complete our audit, and we've received the opinion that the accompanying financial statements present fairly in all material respects the financial position of CSFS as of March 31st, 2025. And a summary of our financial results is as follows. Our assets continue to grow. They grew from $54.8 million in 2024 to $118.8 million in 2025. This is largely due to the development of the Tachik Lake Healing Center, the Burns Lake Foundry, and a building that we've purchased in Prince George to help our continuing growing organization. Our liabilities also grew from $44.9 million in 2024 to $96.9 million in 2025. This increase is mostly due to increased deferred funding and deferred capital contributions, which I'm going to go into in a second. So deferred funding is money that CSFS receives during the fiscal year, but will not spend until the next fiscal year. This increase in deferred funding was partially due to finalizing an agreement late in the year for the prior 2 years. So it meant we received a good chunk of money right at the end of the fiscal year that we're going to be spending over the next fiscal year. And we also received some additional funds from Indigenous Services Canada very late in the fiscal year that it's very hard to spend it in 2 weeks. So it carries forward to the next year. The biggest growth in our liabilities comes from something called deferred capital, which even for me as an accountant takes a little bit to get your head around. Deferred capital are funds that we receive for specific capital projects, like the Tachik Lake Healing Center and the Burns Lake Foundry. These funds remain as liabilities over the life of that asset. So in the case of a building, that is 40 years. So deferred capital in CSFS is going to actually continue to grow as we take on a number of capital projects to expand our service offerings. This looks sometimes a little scary on the financial statements, but understanding that it's deferred capital and it's going to be also reduced over the life of those buildings over the next 40 years It's kind of a weird accounting thing that we have to do, is the best way I can explain it. The current capital funding projects in our system are the Tachik Lake Healing Center, the Burns Lake Foundry. We've received money towards the Vanderhoof Foundry, as well as the purchase of 1190 2nd Avenue in Prince George. So all of those all of the funds that we've received sit in deferred capital over the life of those buildings, which I said is 40 years. When we look at our surplus, we can see that, you know, last year we had a little surplus of $6,000. This year we're sitting at $9.7 million. That $9.7 million surplus relates to a recovery of those prior year funds where we had the deficits from due to Indigenous Services Canada. We have some programs that are funded to actual cost, and Indigenous Services Canada takes a little while to give us the cash back. So we started to see in 2025 that we got most of that cash back, so we're operating. Our surpluses for us are like our rainy day funds. So if we think about it, it's our savings account for when cash from Indigenous Services Canada and our other funders may not flow on a predictable basis. This gives us the way to keep the doors open, services going while we're waiting for those cash flows, that cash to come in so we can continue to pay it. It doesn't mean we're stockpiling funds. It means we're creating that buffer so we can continue no matter what. When we look at funding continues to grow. We grew from $67.4 million in 2024 to $88.3 million in 2025. This does not include the funding for capital projects because, as I said, that's all up in that deferred capital. And this growth in our funding is being used to meet our mandate to provide culturally relevant wellness programs and supports throughout the communities. In order to do that, our staff does continue to grow because we continue to add more services. And so our wage expense grew from $33.2 million in 2024 to $38.8 million in 2025. And while we are committed to maintaining service deliveries in the communities, we diligently want to manage our operating expenses during our growth phase, and the result is our operating expenses increased from $33.0 million in 2024 to $37.7 million in 2025. I know that's a lot of numbers, and I'm around today and tomorrow, but I'm also happy to answer questions now. So, Mr. Cho and Sachanaga.